There are two types of buyers who want to buy with a real estate contract, and there are two types of sellers who will sell on a real estate contract. First, let's look at the two types of buyers. Either the buyer cannot afford the property and does not have enough cash down payment, or the buyer can afford the property but just can't get a loan. Avoid the first and work with the second. Now let's look at the two types of sellers. Either you're a desperate seller or you're a savvy investor who knows how to be the bank. Be the second, but don't be the first. If you're desperate and need to sell fast, then you'll want to find the first eligible buyer who brings just enough down payment cash to cover your closing costs. You'll ignore the extremely high risk that a low down payment buyer presents to you because you're in dire straits today and you don't care about tomorrow's problems. You know that someone who buys with very little down won't be motivated to do the right thing if they themselves come onto hard times, but you'll cross your fingers and hope for the best. However, if you're a savvy investor, then you'll look for buyers who would normally be qualified to buy but just can't get a loan in the tight economy. They have 20% for the down payment and adequate income and assets, but perhaps they can't get a commercial loan or the residential loan criteria have tightened too much. Simply stated, you'll be the bank. Here's how. If you buy a property during the market dip at a bargain price with a low interest rate loan, then you can resell that property to a buyer who is willing to pay a higher price and a higher interest rate. At the market bottom, bank loan interest rates are at historical lows, so the rate you charge your buyer will be 2 to 3% higher. If you do this, you'll have 4 sources of income. You'll have a positive cash flow contribution from what we call the interest rate spread. That is, the difference between the interest rate they're paying to you versus what you're paying to the bank, maybe 8% versus 5%. And you'll have a positive cash flow contribution because they're financing a higher price than what you pay. And you'll eventually have a profit when the real estate contract matures, that is, the difference in the price they bought from you versus the price you paid. Don't be afraid to ask for 20 to 30% down payment from your buyers. If they can't pay that, then they can't afford the property and you won't make any cash flow. After all, you had to put down 20 to 30%, so they should also. Even better, if you buy with all cash and sell on a real estate contract, that's an easy way to get 6 to 10% return on investment on your cash, and your 401k won't get a third that much. Just be sure to use a loan calculator and charge bank interest, compounded daily, just like the banks do. Investing for appreciation is fun and sexy, but in a down economy, being the bank is where the real cash flow is if you work with qualified buyers. Thanks for watching, and if you know other investors who might find this type of information helpful, forward it, share it, and see more like it at investorsonly.net.